Hello everyone and welcome to the Global Business Update for this week with TA. Well, looks like there's a new model in fashion and that is called sell now, make later. As the fashion industry struggles with so many issues such as inventory, finding raw materials, supply chain issues, and also a massive pollution problem where a lot of unsold inventory of garments just gets added on to the environment and not so much of recycling. Looks like they've cracked a new code which is initially to create digital models, sell it online, and then once the demand is there, once the payment has happened, you actually go ahead and make it and provide it to them. Looks like supply chain crunchers are driving more innovations in the fashion supply chain. China's power crunch continues, and some of the recent steps taken to cut back or to cut down on the coal consumption or the coal power production has in fact had a negative impact. Just to make the idea clear, over the last few months we saw the Chinese coal demand rising by more than 14%, but its production of coal has only increased by about 6 to 8%. And this comes in the wake of China deciding to stop investing and operating some of their foreign coal power plants. Looks like some sustainability strategies of China, especially with the target of becoming completely free of fossil fuel towards 2050-2060, is making them rethink some of their decisions. I guess congratulations are in order for TikTok. TikTok reaches the remarkable milestone of having more than 1 billion active monthly users. With a total user base of more than 3 billion active users, it clearly looks like TikTok is emerging as the super app which will be so much versatile for many different streams, from entertainment to careers, etc. They've been adding on at a rate of more than 300 users on a monthly basis over the last few months. And keep in mind that this is actually the only app to have such a massive scale or a massive amount of active users and not be owned by Facebook. Looks like the supremacy is being challenged. Airline stocks are having a comeback. The parent company of British Airways is seeing a rise of their stock prices by more than 20%, and similar positive news on Air France, KLM, and even Lufthansa. As the restrictions are getting lifted, vaccination drives happening all around the world, and the cases somewhat getting controlled, even the impact of Delta being brought under some amount of control, looks like the airlines and the aviation sector is getting ready to rise to the skies. A $2.8 billion investment by Mercedes gives it an over 30% stake in one of the new battery development initiatives, the ACC as they call it, the active sales company. Well, looks like this new investment by Mercedes or the Daimler, the parent group, along with a few other leading battery producers, is helping them to find solutions for some of their battery power crunches which they might face into the future, and could be a kind of an integration for them to take better control of their battery supplies. Their target by the end of the decade is to be hitting more than 120 gigawatts, which is double of the original companies that had planned the investment in ACC. Oyo Hotels, at one time the darling of the tech sector, especially with its accurate combination of new tech, algorithms, and the hospitality sector focus, and in fact it did create the youngest billionaire in the world at one time. They were having a tough time in the pandemic, but just like Airbnb, looks like their decision to go on for an IPO might actually still be on track. Some of the recent fundings have valued Oyo at more than $9 billion, and despite being initially hit by the pandemic like many hotel booking platforms and hotel sector related companies, they have managed to ride or have a smoother ride in the last few waves of the COVID-19 pandemic. Once again, as travel is making a comeback and the vacations are making a return due to the much better control of the COVID-19 situation, I think Oyo is also showing signs that hospitality is not dead anymore. And on a final note, if you are a fan of ESG, the environmental, social, and governance related stocks, you would be happy to know that it's a $35 trillion industry or $35 trillion investment market opportunity. However, there's a concern whether all this greenwashing and some of the fake efforts to showcase some of the activities as ESG and obtain funding, whether it has led to a bubble, whether this $35 trillion value is actually a bubble, and with some new anti-greenwashing laws, standards coming into practice, whether some of these values will come crumbling down. In fact, they are using the word bubble. The question, is ESG real, or is this very high value a bubble? Only time would tell. But if you are an investor in ESG, mind your bucks. You don't want to get caught in a bubble, especially at the wrong time. That's it for this week. And no matter what business you may be in, have a profitable week ahead.